I think there is. Philippines is what I would term as they are now caught between a rock and a hard place. Now, rock hard, that's actually a good thing. Philippines is in a good position in terms of their GDP. I mean, everyone has seen those figures coming out. It's probably one of the best performers in the world right after India. It's right up there with China. So in terms of growth, that is having a great story. Now, this is where we are all grappling with. I mean, if that is happening so well in terms of their GDP, why in the world is the peso dropping so much? Why in the world is the stock market probably the worst in the world at this moment, right? So here's one thing I would like to put in. Let's look at the current account deficit. That's probably one of the main reasons why people are actually losing confidence. So it can be seen as a good thing that imports are really increasing, almost increased, I think, 50% year on year. But at the same time, because imports are rising so much faster in terms of imported inflation, that's, I think, the one key people are not looking at. So that's probably the reason why the peso is dropping at this point.
A very good point you're making. We did take a look at the quality of the imports we're taking in, just so, to kind of stem the panic that's arising. And we did see that it's a lot of like machineries, a lot of things to support this infra push, and a lot of goods for capital formation. So all in all, would you say that this current account deficit widening is pretty much really priced in already? I mean, the government has been warning us that this was going to happen, and they did say, you know what, don't panic. Should we agree to listen to the government on that?
Yes, and that's the good side of it, all right? Meaning to say that because of domestic spending, or rather domestic consumption, that part is actually going up. But there's another part that we're not seeing. So in terms of what I term as imported inflation, so when there's oil prices are rising, that's probably one of the reasons why I would see that inflation is moving up. So we've got to balance two sides. When it comes to inflation, two things are important. I term it as internal inflation and external inflation.
Correct.
Right? So internal inflation is a good thing in terms when people are spending, but I want to look a little bit in terms of external inflation. So external meaning is being caused by other factors. Oil prices
Such as
being
oil?
one of them.
Okay, I was just going to say.
So that's one of the key things that we need to look at in totality when we are trying to make sense of the current account deficit.
Okay, so at least that with the current account deficit, no worries, no reason to panic at the moment, yeah?
No reason to panic at the moment, but we have always got to see the underlying factors. So I think that's where we go slightly deeper into the data to understand that, hey, although there's a $3 billion deficit at this point of time, there are reasons that causes for it. So I think overall, Philippines is in an excellent shape.
Okay, excellent shape, but we do have even the government saying that at least in the near term, we are bound to see inflation actually even rising before tapering off to be within their limit again by year end. Do you see this exact phenomena happening?
Yes, and currently it is already slightly above their band of 2 to 4%. I think it came in about 4.3% recently. So inflation is really like now the story. All right, so what are the people thinking? What are the analysts thinking? It is really a growth factor. The answer is yes at this point of time, but I don't foresee BSP actually raising rates when they're going to be meeting in May 10. So I would actually say that although I know there's an overwhelming what's the word, story in the sense that, oh yes, they're probably going to raise 25 basis points when they next meet. I just don't think so for the second quarter.
Okay, well, I didn't think so again the last meeting, but this meeting, I'm a little bit more confused. What makes you so sure that they're going to hold fire on raising rates yet again with all this pressure? I mean, we did have a really long comment from BSP Governor Espinilla this morning. He insists that the sum of their policy moves are actually appropriate enough for the situation that we are facing right now. This is when he was asked to comment on inflationary pressures, of course, weighing down equities as well as the peso. Again, also, BSP Governor Espinilla said that fundamentals of the company are still and should still be the key drivers of, market choices when it comes to investing in stocks. But a lot of analysts, on the other hand, are saying the BSP is behind the curve. Do you think they are behind the curve? Obviously not, I guess.
I don't think so. So they've held rates for like 3 years in a row now. Will they raise? The answer is yes. I just don't think that they're going to raise it in the next one when
Why
they meet
is
in
that?
May. Well, they probably got to see a little bit more data. I mean, they have done a bit of reforms, right? So I do foresee that probably they'll raise in Q3, not so much in Q2. They just want to get a bit more sense in terms of the inflation numbers, right? How do they make a sense of the balance, the sweet spot, I would say, between internal inflation and external inflation?
Okay, we also know that we went through, of course, the first tax reform package, and they've said actually in spite of the rising inflation that we've been seeing, none of this, or very minimal, is actually due to the tax reform package one. Do you agree with that as well?
I do, and this is probably why I think the governor also, I mean, he's biding his time. I mean, they've held rates for like 3 years in a sense, right? So when they do raise, it's got to be something that is meaningful, something that will really help the economy. So I don't foresee that they will raise it this round. They're probably going to see a bit more data before they make a
Which
conclusive.
specific data is that they would be looking at before Q3?
My personal
Yeah.
opinion, I honestly think it's a current account deficit. So
It's really still
although
that.
it is right now, I'm seeing the deficit of $3 billion, right, at this point, they really want to see in what portions the deficit is being accounted for. Is it internal? Is it external? Is there a huge domestic demand? Because at the end of the day, if the Philippines economy is really going to have the growth story like China, it is a fact that they would have to have more domestic consumption, so to speak. But I honestly feel for it to grow stronger, exports also have to take off at some point.
And what is the prospect of that, of Philippine exports actually taking off? I mean, more than the imports, it's really, I think, the more critical thing to look at is our imports, which have been dwindling most of the time over the last couple of years. I mean, right now we are looking at, some threats to global trade, which were not there when we started 2018. Now they're very much here, what with US and China on the verge, maybe not, maybe yes, of this trade war. So what do we make of that? And do Philippine exports stand a chance in the face of that?
Great question. So I think part of the reason, I mean, for us to make sense of the entire jigsaw puzzle, Sean, I really think that we have to look at the US-China trade war. I mean, here we are talking about the largest economy in the world, going head-to-head with the second largest economy in the world. One side is saying this, the other side is saying that. It's a lot of protectionism that's going on, right? And we in Asia technically are more export-oriented. So if there are fights going on in those larger economies, naturally we're going to face some headwinds over here. So having said that, globally, I'm starting to see a lot more money moving into US treasuries and bonds. Now, what is that telling all of us? It's basically telling us it's a risk-off environment, which is part of the reason why stocks are having a bloodbath in Philippines.
Okay, so basically everyone playing safe now and going to their safe haven assets. And of course, fixed income is a lot safer and less volatile than stocks. So having said that, as an investment manager and the CEO of Fullerton Markets, what do you advise clients to do, especially here in the Philippines? What would you tell them to do? Where would they put their money? Obviously, the stock market right now is looking a little glum.
Sure. I'm slightly biased, Sean, in this particular aspect. I love the currency market, and why do I love the currency market? Well, number one, it basically gives us what I term as a common denominator of the entire country. Think about this, right? Before money actually moves into the stock market, real estate market, or the bond market, it's got to come into the country first. So let's just say if a US fund manager from the US, he puts money in Philippines, the US dollars has got to change to pesos first. So understanding currencies would give us a global picture of what's going on in the economy. Now, very quickly, so in terms of currency, what am I looking at, right? Currencies are always, you have one currency versus another. I would, at this point, start to share with investors, look at commodity currency. So as an example, CAD yen, Aussie yen, even Kiwi yen. Why? On one side, you have the commodity-backed currencies, in which cases they are falling because it's a risk-off environment, and the Japanese yen is what I would term as a risk-off currency, right? So when you pair that together, I think it does show a nice downtrend where people can make some decent gains by shorting these currency pairs.
Very interesting. At least that is something we can all grab hold to, although Forex currency trading, very tricky. Also with markets, running 24 hours a day. Now, I guess, just before we let you go, Mario, I just want to ask you about your Fed outlook. How do you think the Federal Reserve is going to move in these troubling times?
Yeah. So they are still looking at a couple of things. Number one, their GDP growth. Number two, their non-farm payrolls, which in terms means the jobs, right?
Yeah.
So although the last non-farm payrolls that I was watching, it did drop about, say, 100 over 1,000, if I'm not mistaken, but their 3 months rolling average is still above 200,000. What that tells me is that they are still looking in good shape. However, I do see that they will probably drop from 3 increases to about 2.
All right. Thank you very much for all your insights and all the tips you gave us today. Mario Singh, CEO of Fullerton Markets.